Oh boy, we have a very exciting video for all Tesla investors. As you know, yesterday, Tesla cut prices in China, and this has the bears coming out of the woodworks like termites in the south. It's getting kind of ridiculous at this point. And we're going to get into some of the latest news that we have not covered here on this channel that just came out after the bell today. We're getting a lot of these 13F filings, a lot of commentary from institutional investors regarding Tesla stock, and we do have big catalysts still coming. By the end of this video, we're going to be able to go over some of those catalysts together, like some of your Chinese economic data and some big US data coming out tomorrow. I want to give you guys my prediction on and how this could affect the market. So we're going to get into it. I hope you are ready. If you are not, grab yourself a coffee or whatever brew you are drinking on this time. It is a Dr. Pepper, baby. The first bit of news we are going to cover is from Sawyer Merritt. Again, thank you for all you do over on Twitter, getting the news probably the fastest out there. I don't think there's anyone faster than Sawyer Merritt, so appreciate it. Now, Berkshire Hathaway has sold 45%, $700 million of their General Motors stock, according to a new 13F filing. Now, this is not exactly great news for Tesla, but it's not exactly bad news at the same time. It says more or less your General Motors is probably not going to be doing so well. They obviously have lower margins than Tesla, and they have weaker demand than Tesla. Regardless of what the bears say, Tesla is killing the competition across the board. This is not likely to stop anytime soon. The first example of this is the fact that Tesla wants to expand their Giga Berlin factory's workforce to 22,500 workers from 11,000 currently. And this article is in German, but it's along the lines of that expansion. They need to hire more employees. And you're seeing this trend really in Europe with Giga Berlin as well as Shanghai. Tesla just put out another recruitment video for Tesla Shanghai. At a time where the bears think all is going wrong for Tesla, they are looking to hire more people. Typically, that's not what happens if a company is expecting a bad next year. And the markets are going to turn their attention to 2024. And the markets have it all wrong with Tesla. Point in being, this chart comes to us from the car dealership guy over on Twitter. This is a chart of the days of supply by make. Now, Tesla has 19 days of inventory. And this was one of the biggest stories the bears had against Tesla, that their inventory is growing. They've produced more vehicles than they have sold 5 quarters now, but it's only a couple thousand here or there. Well, look at this, 19 days for Tesla. While Tesla's not on this chart, Tesla would be the lowest maker of vehicles in general as far as days of supply that is currently in inventory that has not been sold. Tesla would be sitting about right here. Honda is doing the best out of all of your other car makers, and they're sitting at about 25, 26 days worth of inventory. And then Chrysler is sitting over here with about 110 days worth of inventory. And as the car dealership guy says on Twitter, if this continues, we're all going to be rolling around in Chrysler Pacificas in no time. This really goes to show people will pick a bone with Tesla when there's not an argument to be made, right? The stock is unfortunately heavily correlated to the sentiment that is out there in the markets. 19 days of supply, that was one of the big headlines that affected Tesla stock last earnings, and it's better than every other automaker that sells vehicles in the US. The next thing that you need to know here tonight is an article from hotcars.com that I think is complete FUD. FUD stands for fear, uncertainty, and doubt. Why the Cadillac Escalade IQ has the Tesla Model X shaking in its boots. It says the Cadillac electric SUV is filled with luxury, so much so that the Tesla Model X might have something to worry about. Okay, Number one, it is going to be a long time until this thing actually gets rolled out in some actual numbers here. Okay. And the price tag on this is $130,000. If GM tried to charge a similar price that Tesla charges for the Model X, well, they would be even more unprofitable than they are selling the vehicle at $130,000. It's going to be multiple years before anyone really in this space can make a profitable EV. I do believe the Chevy Bolt is a little profitable, but it's such a cheap vehicle. The margins are razor thin. They're pretty comparable to the ICE vehicles that GM sells now. And finally, Ford's Blue Cruise expands flexibility with complimentary trial, monthly or annual offers for hands-free driving tech. I use my knee anyways, so that's not driving advice, but they want to charge $75 per month, or about $800 per year. They are doing a 90-day trial starting from the purchase to experience this hands-free highway driving, and after that can activate Blue Cruise when and if they choose. Ford says they're going to install this in an additional 500,000 vehicles for the 2024 model year in North America across Ford and Lincoln, expanding availability and saying it currently has about 225,000 Ford Blue Cruise equipped vehicles on the road today. This is far from full self-driving, and I think the further Ford gets into the autonomous sector and they really try to create something that is autonomous, they're going to find that it's a lot more of a problem to create your own rather than to license full self-driving. I still think Ford is the major OEM that was in talks with Tesla to license full self-driving. But again, I think Toyota also could be in the same kind of category. I don't believe Toyota really has anything as far as autonomous driving software, so they're really starting from scratch as well. Let me know down below in the comment section if Toyota does have some type of autonomous driving. I have never heard of it, but again, Toyota is a foreign-made company. Now let's take a look at some of the news that just came out as well that is very positive. Japan's economy grew 6% in the second quarter, far more than expected. You were only expecting about 3.1% growth in the April through June quarter, and this number came in at 6%. This is much better than expectations, and this is positive for us here, our markets, because you got Europe that's in a recession. You have China that's heading into a recession, literally as we speak. This data we cover at the end of this video, probably not gonna be too pretty. If it is, if that comes out good, then tomorrow's probably going to be a pretty good day in the markets. But you don't really have any other bright spots around the world. But Japan looks like it might be a bright spot where they are actually growing. Hopefully China and Europe can come out of whatever downturn they're heading into. But the odds of a US downturn become a lot greater if the globe goes through a downturn. America is by far the most resilient economy in the world, minus any great financial crisis or debt problem or bank problem. We do have our own issues, but we tend to be more resilient than other countries. We tend to be like the last domino to fall. So this is very positive news coming out of Japan. Let's now go ahead and roll some clips from analysts covering Tesla's price cuts that happened yesterday. These analysts and their commentary came out today, a lot of it after the bell today, so that's why you're getting it right now. And I think this one is just absurd. So let's run the clip, and I want to provide a little bit of commentary. It's not long at all, so we'll just play it now.
Start with Tesla, Victoria. They've also reignited their price war in China, announcing new cuts for Model Y and Model 3. Stocks down about 2%. What's the trade here?
Beyond like not getting involved in the Elon Musk versus Zuckerberg drama, I think the trade is still a sell. And hear me out, I'm not a Tesla hater whatsoever, but the stock is up 93%. You've already seen all of these pressures on margins. You had margins slip to 18.1% just to sell cars. And Elon even said it himself. We will happily sacrifice profit margin right now to sell more cars. And so I think this is just going to be a battle that doesn't bode well for Tesla in the short term. So for me, I'm all about taking profits, and I think it's a good time to be looking at trimming back this stock because they have faced competition in China. And some of the July numbers, that I think it was, there were the cars that they manufactured and distributed in China in July was down like 31% according to the Chinese data. So you're seeing.
I hate that. Okay. Let's actually look at what happened. Sure, month over month, sales were down in China 31%. That's because you came off of a really abnormally strong June, which was great, but it makes that comp worse. But let's talk about the fact that Tesla sold 64,000 China-made EVs in July. This was up 128% year over year. The year over year numbers from even August are going to be impressive as well. So if you want to make the argument that sales are down month over month, well, make the argument that sales are up 128% year over year. You can't just highlight the one side of it without talking about the other. And I think this is why Tesla stock is so heavily kind of manipulated by financial media as well, when people, are making these assumptions based on clips they see that don't provide them the full scope and scale. Like a good example of what she just said as well, that Tesla stock is up 93% year to date. Sure, that's correct, because Tesla stock was $100 per share because it was artificially being shorted into the ground before some shorts got squeezed out of short positions and had to cover. But a matter of fact, from your 52-week high, so 1 year ago, Tesla stock is down 20% from there, year over year. So is it really that overbought or overvalued? No, it's actually cheaper than Apple, Microsoft, and most of your other large cap tech.
Is this a surprise that we see more price cutting from Tesla in China?
Yeah, we may have thought that we were done in China. You mentioned off the top sort of signs of abating. We even had a sort of curious announcement of an agreement among manufacturers to kind of call a truce, and that lasted all of a couple of days. I think what we learned in the sort of following weeks was, from Elon Musk himself talking about this idea that, price cuts, he would not rule out continuing to bring pricing down. He specifically was citing interest rates. I think rather than that being a factor in China, it's more a factor of just the amount of competition in that market, how competitive it is, how crowded it is, and how much the Chinese manufacturers in particular have really proven strong. I think BYD in particular is really bringing up an awful lot of volume and creating a lot of competitive pressure for Tesla to have to answer.
Right. It's really interesting to look at the way that the competitive pressure is the same and also different in different geographies. So why is there so much pricing pressure from this competitive environment then in China?
I think we're seeing a pattern of sort of, as costs.
Look at that, though. BYD stock was down 6.78%. Tesla's drop after cutting prices, about 1%. People are more worried about BYD, I would argue, than Tesla. But let's let him continue on.
Come down as input costs come down. We saw the last couple of years, not only the semiconductor crisis putting some pressure on companies, but also raw materials for batteries. So lithium and nickel prices in particular really being a difficult challenge for these companies to work through. Those prices have come back down. We've seen, with China having this huge lead in terms of getting a battery supply chain up and running, we tend to see, as prices come down, China, price is able to come down first. And so perhaps we see that spread to other markets.
So perhaps that spreads, which is interesting in terms of read across into Europe and elsewhere.
Amid the competitive market. But let's focus in on Tesla and what is going on there. We already, of course, have seen a lot of back and forth price cuts in China, sparked initially by Tesla. It looks like that they are cutting the priciest models of their various vehicles. Their long range and performance versions of the Model Y are being cut, according to its Weibo account.
Model, yeah. At the end of the day here, for Model Y and the SUV that they've tried to continue to make sure that they have traction with, especially at that upper end, as you were mentioning, within China, highly competitive market where there's a lot of EV plays. That is exhibited through some of the targets that Toyota has, which was one of the reasons why Goldman Sachs was very bullish about the potential there, saying that the targets that they've set forth, 1.5 million by 2026 in terms of their EV potential there, and then 3.5 million by 2030. Now, if you're thinking, all right, well, what about Tesla? Now, internationally, Tesla has been looking at figures, at least as of last year in 2022, about 1.3 million. So all of these things considered and the markers that Tesla has already hit versus some of the targets that Toyota has in China and more broadly as well. But then additionally, the plays from Ford, the plays from GM, there's going to be a ramping up of so much of the production of electric vehicles. The larger question is for the pricing strategy, and that gets us back to Tesla. They may be looking through the consumer environment right now and just saying, how do we slash prices enough to make sure that we're in garages or that we're in driveways to pull people into an ecosystem, and then the job is just retention and keeping them there, hopefully. And that could come in a myriad of different ways. But for Tesla, at least that seems like what's at play with the strategy right now, too.
Yeah, although there are questions about, to your point, about what it's going to mean for the margins here. And at least one analyst over at Evercore ISI said that these cuts in China could presage cuts in Europe and in the United States as well. Yeah. And remember, we already saw Tesla's production numbers coming out of China, shipments coming out of China down 31% in July. So that's something to keep in mind, too, when we're looking at all of these dynamics. And as you mentioned,
Again, there's that argument again that sales were down 31% month over month, but they fail to leave out that sales are up 128% year over year. You can't acknowledge the bad without saying the good, and that is often failed in mainstream media when it comes to financial information. They just want to feed you a narrative. That's it. All I'm saying, take into consideration what they say, but fact check literally everything, because 9 times out of 10, they're telling you one side and the other side looks a lot brighter. And that's hopefully what you've seen as far as this comparison is concerned. Now, let's get into some of the economic data that's going to be coming out tomorrow. The biggest one is obviously retail sales month over month for the month of July. This is going to be coming out at 8:30 in the morning. You're expecting 0.4%. Some economists are expecting 0.3%. Last month's reading was 0.2%. I think you're probably around 0.3%, a little bit lower than your consensus view, but maybe not too low. I'll tell you right now, you have a problem. If you come in at 0.2% or lower, you got a big problem, especially if somehow you come in negative. And retail sales data can vary a lot. So it's possible. It's actually possible. This could come out negative. That would not be good. Now, on the other hand, if this comes out as 0.4% or higher, that's going to be good because investors are no longer concerned about inflation, or more importantly, good economic data that leads to inflation. The economic data hasn't been good enough to lead to inflation. That doesn't change anything if retail sales are up 1% month over month or 0.5% month over month. Investors just don't want to see retail sales being negative. They don't want to see the economy going into recession. That's never going to be a good outcome for the markets, no matter what kind of cycle you are in, I guess, besides 2022, where bad economic data was really good for the markets. And we've seen what ultimately happened with that. Stocks tend to fall in the midterm whenever you're in that kind of market cycle. We are also going to have Home Depot earnings, in which I spoke about in the video earlier today. That's going to be important coming tomorrow morning, because that's one of your bellwether companies for the economy, as well as Target pre-market Wednesday, and TJX. Thursday pre-market is Walmart. So these 4 companies will be very important for the markets to really answer the question, is the consumer slowing down? Are they spending through this slowdown? Which spending through the slowdown is just debt, which ultimately makes the debt bubble much worse down the line. But here in the short term, investors want to see good earnings from these companies. If we don't get good earnings, that's going to be a problem. If retail earnings with these retail companies are a weak spot for this earnings season, it's not going to have good implications for the economy. Keep that in mind. Now, two things that I noticed today during trading with Tesla as well that I think is important to point out. One is good, one is bad. The bad is that you're finding resistance at the same level you found support at 240. Now, you started the day off today, sold off with Tesla stock, hit a low of 233.76. Congratulations if you were able to buy that dip. If the markets bounce from here, we're likely not even heading back down to those prices. But it's a possibility. Now, you hit $240.66, $240.66. You held 240 for about 3 minutes and then you fell. And a lot of this was algorithmic kind of trading based. And then you did not hit higher than 240 throughout the rest of the entire trading day. And after hours, about 5 minutes after the closing bell, you hit a high of $240.00. Right on your prior support level, right on what looks like resistance today, and then you fell in after hours. The positive is that there is a lot of demand to buy Tesla around that 237 to as low as 233. You really didn't get many dips down to those prices. Tesla stock really held just a couple dollar range, really in between 238 and about 239.50 for a vast majority of the day today. And I think you're going to see a lot of good demand to buy Tesla stock because look at the Cybertruck. It's coming out in just probably a month or two from now. Look at the Model 3 Highland. That's going to be coming out soon as well. And you really don't want to bet against Tesla when they give us a new product. That's always been a losing bet. So I think the long term, people want to be bullish, but in the short term, the trading algorithms are, kind of pushing the stock back once it got close to about 240. Now, again, absent of any bad news with Tesla, Tesla is just going to do an over-dramatic version of what the NASDAQ does. So if the NASDAQ rises on any given day, I expect Tesla will rise as well and rise more than the NASDAQ. Vice versa. If the markets continue to sell off, then Tesla stock could fall. But as far as these 200, 180 price targets people are talking about, especially down below in the comment section or on other forms of social media, that's not going to happen unless the markets crash or unless Tesla gets really bad news. We are in the final seconds before the China's industrial production year over year, retail sales year over year, unemployment rate come out. Unemployment rate expected at 5.2%, retail sales year over year expected at 4.6%, and industrial production expected at 4.4%. Industrial production year over year comes in at 3.7%, much worse than expectations. Again, expecting 4.4%. Retail sales year over year come in at 2.5%. You were expecting 4.5%. Very rough numbers here. The unemployment rate went higher. You were expecting 5.2%. This came in at 5.3%. And then last but not least, your fixed asset investment year to date, year over year for July came in at 3.4%. You were expecting 3.8%. So this was bad data across the board. Probably not going to be a good thing for the markets coming tomorrow. Ouch. Retail sales, even the unemployment rate went higher. Industrial production came in worse. Pretty bad misses here. Let me know what you think about all of this information down below in the comment section. Hit the like button and subscribe to the channel if this is your first time here to the channel. We keep you up to date with everything going on every single day, minute by minute, second by second, if it's important data that you need to know. My name is Michael Tyler. Thank you for joining me this evening. I will see you in the next one.